Today, our journey continues. We will keep analyzing multi-time frames with price action and smart money techniques. Of course, we'll be using our best trading view indicator in this journey. So, you can see how the momentum strategy really works. Let's start now. Let's look at the conflicting trading ideas and go through some clues on how to avoid taking bad trades. When I was looking at the Solana chart with this multi-imbalance area, I honestly thought this was a great possible location to look for longs. And it wasn't just that either. There were also three very clear and identical swing failure patterns on the chart. So overall, this looked like a great spot where the buyers could potentially step in again and ignite a second leg of the rally right here. Now let's drop down to the 5-minute chart and talk through this setup in more detail. This is the multi-price action location that we just identified on the hourly charts. When I first saw this, I noticed this internal market structure break followed right away by this inner imbalance area. And this was a solid 2-hour trade setup. At first, this trade actually looked like it was working really well and even reached 1-hour profit during the move. However, by the end of the day, this trade failed pretty badly. Even though we had what looked like a high quality setup here, we missed something important, and that's we really need to think about and question right now. Now, when I was looking at this chart from a different perspective, I also noticed that the previous day's high had already been hunted. However, on that previous day, the high did not really act as a strong support area at all. So what happened here is that the buyers simply did not have enough strength or momentum to push this price even higher. Instead, what we got was a clear counter market structure break right after the previous day high was hunted. And that alone already gives us an idea of a potential short trade opportunity here. But we actually took a long trade instead. So sometimes it can be really hard to avoid this kind of conflicting trade ideas, and it is human nature to miss things and make mistakes. So do not worry about this kind of mistakes in your trading career. Okay, what I want to say here is that institutional levels like the previous day's high and low or the week's high and low can sometimes be very tricky areas to trade around. As you already know, we normally expect price to hunt these levels, especially when the price is trading very close to these zones. However, once that area gets hunted and liquidity is swept, there are usually two possible outcomes that can follow. First of all, in many cases, these institutional levels can act as a strong support or resistance areas, and the obvious trend may simply continue in the same direction. That is exactly what I expected to happen on the Solana chart we just analyzed together. However, many other times, we see a very clear market structure break after those liquidity levels get hunted. And that break of structure is usually followed by full trend shift where the direction completely changes at all. So imbalances and liquidity alone are not enough to build the high probability trade ideas. You also need to clearly follow and carefully analyze the overall market structure if you want the best possible trade setups. Okay folks, this is the end of a very educational video. Please take care of yourself and see you next time. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free trading view indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.